Power hour trading strategy. Some traders also refer to the first hour of the market, 9:30 a.m. to 10:30 a.m., as a power hour due to extreme volatility. However, the traditional and widely accepted power hour occurs at the end of the session. It's often called the daily battlefield because this is where buyers and sellers settle the final score. Volume increases, liquidity deepens, momentum sharpens, and sentiment reveals itself without filters. To profit from power hour, you must understand why this window behaves differently. The market moves for a reason, and the final hour contains multiple forces converging at once. By 3 p.m., traders are positioned, news is digested, momentum is clearer, and algorithms fire off high-frequency orders. Meanwhile, institutional desks must rebalance portfolios before the market closes. Many hedge funds operate under mandates that require end-of-day pricing accuracy, meaning they execute most of their orders in the last hour. Additionally, options expiry pressures, especially on Fridays, can generate dramatic swings. When dealers hedge aggressively, price can shoot upward or downward quickly. The result? A natural breeding ground for volatility and direction, and volatility combined with direction is essentially the foundation of all profit opportunities. Just a quick reminder to please smash the like button and subscribe to the channel. Also, you can visit us on the web at investmenttees.com and use code BLOG and receive 25% off your next purchase. Power hour consistently occurs from 3 p.m. to 4 p.m. Eastern Standard Time. While the rest of the day can sometimes feel erratic or slow, this final hour is structured, concentrated, and often predictable. If the market has been bullish all day, power hour may accelerate the trend. If the market has been bearish, power hour can intensify the selling. If the market has been choppy, power hour may break the range decisively. During power hour, trends mature, breakouts validate, reversals clarify, and volume makes price movements more reliable. Traders can use this 1-hour window to find direction with higher confidence. The benefit is not merely the increased volatility, it's that the volatility tends to be meaningful rather than random. When price moves during power hour, it usually reflects institutional participation and genuine supply-demand imbalances. For example, if a stock has been slowly grinding up all day and suddenly surges at 3:15 p.m. on rising volume, it's often a clue that funds are buying aggressively. Traders who catch this move may ride it into the close. On the flip side, if a stock collapses during power hour after a weak session, chances are institutions are unloading. A short seller might take advantage of that breakdown. Power hour essentially amplifies whatever the market has been signaling all day. If you learn to read those signals, this hour can be extremely profitable. Power hour example. Imagine a stock trading quietly between $50 and $50.30 throughout the day. It touches this range multiple times without any clear direction. Then, at 3:05 p.m., volume dramatically increases. The price pushes through $50.30 and rallies toward $51.50 by the close. What happened? Institutions finally stepped in. Momentum traders followed. Algorithms triggered. And the stock revealed its real direction only in the last hour. Another example. A stock trends downward from the opening bell, hitting $100 and slowly sliding to $97 by mid-afternoon. Many traders expect a bounce. Instead, power hour accelerates downward pressure, and the price sinks to $94 before closing. This kind of late-day sell-off is often tied to portfolio rebalancing or bearish sentiment confirmed by institutional movement. Power hour acts like a magnifying glass on the day's direction, making trends clearer, stronger, and more tradable. To trade power hour effectively, simplicity is your best weapon. The most successful strategies rely on momentum, breakouts, or continuation patterns that align with the day's overall direction. If the market has been bullish, you might wait for pullbacks in power hour to join the move. If the market has been bearish, breakdowns can offer profitable entries. A trader who tries to fight the direction of the day during power hour often finds themselves stopped out quickly. Volatility is too strong. Momentum is too real. One of the advantages of power hour is that price action becomes clearer than earlier in the day. You can reduce noise, avoid false setups, and trade only when the market has revealed genuine intent. The power hour's profitability comes from three essential factors. First, increased volume improves liquidity, allowing for tighter entries and exits. Liquidity means you're less likely to get caught in unfair fills or slippage. Second, volatility invites larger price swings, which reduce the need for huge position sizes. Traders can profit with smaller capital when price moves rapidly. Third, the market becomes more directional, meaning you can trade trends instead of guessing at reversals or noise. For example, a trader entering a stock at $38.50 during a power hour breakout may see that stock run to $40 within minutes. These kinds of late-day surges happen regularly due to institutional activity and daily settlements. In essence, the perfect mixture of volume, volatility, and direction turns power hour into fertile ground for high-probability setups. Power hour may offer higher profit potential, but it also requires discipline. Because price moves faster, a trader must respect risk parameters. The key is to use tighter stop losses and avoid overleveraging. The final hour is not a playground, it's a controlled storm. The trader who enters without a plan often finds themselves whipsawed. Meanwhile, the trader who waits for confirmation, clear breakouts, strong direction, meaningful volume, positions themselves for success. Power hour should be respected like a potent tool, beneficial when used properly, dangerous when misused. Many traders underestimate how much psychology plays into this hour. By 3 p.m., the market has already drained emotional energy from participants. Traders are tired, impatient, overconfident, or desperate. Psychological missteps become common. Smart traders exploit this. When fear escalates, breakdowns accelerate. When FOMO hits, breakouts extend. When uncertainty fades, trends form more naturally. Power hour reflects human behavior at its most compressed and amplified. Understanding this psychological intensity gives traders a mental edge that can differentiate winners from losers. Power hour is powerful but only when paired with a clear trend or a strong catalyst. Some days are too choppy. Others lack volume. Some are pre-holiday sessions where markets barely move. The best traders adapt. They know when power hour matters and when to ignore it. A useful rule of thumb is this: if the market has shown consistent direction throughout the day, power hour will often exaggerate it. If the market has been lifeless or indecisive, power hour may offer little more than noise. The goal isn't to chase every power hour. It's to choose the ones that align with high probability setups. Conclusion: when used correctly, power hour is not just a time frame, it's a strategic advantage. It compresses volatility, direction, and volume into a single concentrated window packed with potential. If you want a trading schedule that's manageable, structured, and built around high probability conditions, power hour may be the most logical place to focus. It requires skill. It requires patience. But the rewards can be substantial. And ultimately, the question isn't whether power hour works. The question is whether you're ready to trade it with the respect, discipline, and clarity it demands. Thank you for watching.